Good afternoon and welcome to the afternoon wrap-up and with ForexAnalytix. And we're seeing the euro. It did go in and pull back. I was on Face today and we were talking about, if you weren't there, talking about the dollar and the correction, basically because at this point the case was made. The dollar's been basically priced for being a currency with a divergent central bank from all the other central banks. And we had also a very strong economy. And we've seen that change, as of recent, not even that recent. Over the last 3 months, we've seen data deteriorating a little bit more, but employment's been strong. So been able to go on in, or the market has been able to ignore that for the most part. But as the data has continued to get worse, then the market started factoring in, what if there were to be a rate cut? And that started to gain a little bit more momentum. And as I mentioned 2 Thursdays ago, we had the worst manufacturing data in nearly a decade. And that really just basically reinforced what the market was already thinking. It started pricing in not only a cut in the fall, but even beyond. And then we had Bullard come on a couple of days ago, then Powell, and basically push this thing lower. And lowers what we got. We're looking for a move down here, really to 96.63, which is a 38%. That was our target to start the week out. You can see that. Here's our analysis from over the weekend coming into the new week. We actually, on our bias chart, which we do here on the European crossover at 4 a.m., it's available. That webinar is available for subscribers to ForexAnalytix. Then it's recorded and made available to our members well before the New York Open, if they're not up for the European trading. And it's posted much later. Today, I actually posted it myself early enough so that people could take advantage of it in light of where we were with the euro. We had a pretty good run up. But on the dollar index, we were looking for 96.79 for a bias chart support. The low today was 96.75, so we missed it by 4 pips. High we're looking for the euro was 12.87. Actually, I mentioned in the room, we're looking for a stretch up to 12.93, but we were able to take out 13. But let's go on and move on here with the euro. And one of the things that we focused on, and I reiterated in the Face webinar, and maybe thinking, well, God, how the heck did we get all the way up there? You can see here we've made a pullback to the 38%. Let me go on and get rid of this here. And what I was talking about is just to touch base on real quick, I was talking about price structure. And you can look at price structure in different time modes, so to speak. And I use that myself, and along with different things I primarily scalp. One of the ways that I mentioned in the Face webinar, as far as for price structure, was when we looked at here at the dollar CAD and how the dollar CAD had made multiple stabs above 135, but we just couldn't get any traction. We referred to it as the elusive 3504, but we were referring to it as every time it peered its head above the foxhole, it got shot down. Okay, peered, got up to 35, shot down. Back above 35, shot down. Here, and we finally started, move higher. We kind of dithered the Thursday, and on Friday we're pushing higher, and then here we go. And so we had here that if we got a sell, if we got a close below 34.77, be a straight up sell. And sure enough, we saw this pullback. And the reason I'm referencing that is when I'm talking about the price structure. When you look at this, you can look at levels and things like that. But as I mentioned before, I like to put myself in the eyes of the other trader or the other trader's shoes. Here was for Friday. It said the dollar CAD closed above the elusive 3504. We talked about this yesterday. A daily close. It's going to put a bad taste in the bull's mouth. Well, we're referencing this from a longer term point of view, so to speak, a daily. So I know we already covered that yesterday. I don't want to go over that again. But I want to compare that in the sense that, which I think stands out a lot more clearly than the dollar index, because you can see how frustrating it had been for bulls. Couldn't get above 135. They finally do it, and then it starts to slide back. And then compare it to what we saw in the euro on an intraday basis. So yesterday, as I mentioned, I referenced that, hey, look, we came up, we broke here, we're rallying. 38% to 1237. Market doesn't even blink an eye, just keeps on blowing and going. So finally, we made it up here to the 50%. And we saw a nice little pullback from yesterday, but not much of a pullback. Because if you were bearish, probably be thinking, okay, probably get down to about the 12, 16, 15, whatever, maybe down here about 1206. and be able to cover. Maybe they added some shorts or whatever, but the market started marching right back up. And we talked about this yesterday afternoon about an undertone bid in the market. And so when I came here in the European crossover webinar, we talked about this and we're saying, hey, look, this thing's probably going to want to punch higher. I mean, I know we have triple confluence here with 1280 and this 50%, the 161% here, but this market looks like it really wants to punch higher. And we had our resistance here at 1287, okay? We actually took that out by 1 pip, and then we saw the market pull back. What came out bad, once again, poor data, was the ADP. So that really got the euro going. But the reason the euro was able to go so much stronger is because we really had the shorts feet to the fire. They weren't being let out of jail. So these stops were going to be pushed, and they were going to push them for all they were worth. And now we're seeing a decent little pullback. One of the reasons, and we covered that in the European crossover webinar, we said, hey, look, we do have ECB tomorrow. They're talking about potentially TLTRO. So we might find ways to make it a little bit easier to, stimulate some growth here. And hang on one second. Sorry about that. I had to go and sneeze. So we've seen this dip back. And I thought when we were doing it in face, we were in the 1290s, I think 1292. I said, this is not a bad place if you want to take a short ahead of the ECB. We're looking for an ECB dip. I didn't expect it to come this much. And I think actually you can see here, we're pressing here. I think we can probably come down probably as low as might even be able in Asia to spook it down to about 1211, 1208, maybe, okay? Because we would take out yesterday's lows, okay, and probably punch them a little bit lower. But I think, once again, I think that the euro is going to be a buy, more so as a de facto because of the repricing of the dollar index. So once again, just to reiterate on that, I think that's what we're looking for. And on the dollar index, we have a resistance coming at 97.31. Someone was asking about the line in the sand. To me, the line in the sand is going to be this 97.81, because if we get back beyond 97.81, you really start to turn things around, and now we start to try and make a move higher. I don't believe that's the case because we've had so much pushing back and sliding back here on the dollar. Someone was making the case that, hey, look, it's probably just the Fed talking, blah, 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 and so forth. The point is that it's not just a one-time thing. We've seen, evidence, ancillary evidence from report after report after report sliding. The market's been making excuses, just like someone, let's say it was a friend of yours that was really, that someone was saying, boy, he's undependable. And you're like, oh no, Joe's good. He's always good. He's been here. And then, he misses another appointment and one more appointment. Eventually, if they start to build up, you're like, oh, well, maybe he's not so dependable. And that's what's happened with the data and with the dollar, and why the market started to turn, and why I was saying I thought the dollar could pull back, because we're priced for, I don't want to say priced for perfection, but we were priced as the only central bank that had been raising, and we took a little bit of a pause, and it was open to go higher. And now the data has really started to catch up. And the thought being that, hey, they may cut. And even the Fed saying, yeah, we're open to some cuts. But it's not coming out of nowhere. I mean, obviously the row with China is continuing to linger on, and now with Mexico, and now there's even, Trump had mentioned about, possibly tariffs on European cars. So it keeps on going. Also, the issue with Japan is like, you have to price this in, whether you believe it or not. The market's going to go and ultimately go and price this in. So I don't think the dollar's going to fall or go to hell in a handbasket. But that being said, a good correction, yeah, reasonable. And going into the ECB, yeah, I think, we might even dip a little bit further, might even spook the market, take out 112, and then I think we're going to be going right back up again. We did finally blow some shorts out of the water, so maybe we have to do some work here. But overall, I think, even from a technical standpoint, there's no denying that we not only took out this trend line, we took it out with gusto. We've rallied up above 113, so really any moves back down here are going to be well defended, even for those that might still be short if they are. Okay, looking here with the dollar yen. Well, yesterday we had our bias chart resistance at 836 and or 837. We took it out, we missed it by 1 pip, and I'll be doggone if we didn't dip back down here again. One of the concerns I had with the dollar yen was that it had not matched the kind of moves that you were seeing out of the the S&Ps. Someone was asking about the S&Ps earlier, and I was saying, well, look, it's still on the bid because they still think that there's going to get some kind of good news out of the U.S.-Mexico tariffs, and I think that they may. I think they're going to try and avoid that happening. I don't think it does anybody any good. It's going to send the market moving lower. But that's a take here on the dollar yen. I think it's still a sell on any rallies back up in here. We've really, if you look here, we broke that pivot, the 927 here. And nothing's going to change. If you're looking for a line in the sand, we'd have to get, in order for us to get above this, we'd have to get 2 consecutive daily close above 927 to say, hey, we're done with the bottom. Doesn't mean we're going to the moon, but we'd be done with the bottom for now. But it had to be 2 consecutive daily close above 927. You can see the importance of this pivot that goes back. Very, very important pivot here for the dollar yen. Let's go and take a look here on the cross rates, something that we didn't touch yesterday. We can see the peso starting to slide back. Sliding back because, like I said, there might be a decent chance here that we get something positive, if you want to look at it that way, with the peso. Let's go and take a look here. We had, if we look on here on the daily, I've got a great confluence there in the 1942 area. Put this in here. So here's 1942 and 1941, the 38%. I was hoping that this thing was going to, we actually made this move on Monday. I was hoping we would have made this move on Tuesday. Then it opened the door for bulls, some disappointment. We pull back in thinking they get something resolved. Well, that already happened, and we've already started sliding back down here on the peso. I think that they'll get something worked out. I think they do. Even if it's not immediately worked out, I'll say we're close or something like that. So let's go on and move on to the cross rates. And we've seen the New Zealand, the Kiwi yen really take off and actually made it back up to the 72 cents. If you see this here, let's take a look. It went right on up there. I think that's what we actually even had by chart resistance. Let's see if we did, or well, we really blew past this all the way up to 72 cents here, making its run for all it's worth. And yeah, we actually did from the European crossover. You can see here 72 cents. And as I mentioned before, look at this. As I always tell people, I never put my levels on the high or the low. I made a reference to that this morning. How many people sold the high and how many people bought the low? So what I do is I run them across all the touches, and that's where you're going to see where the volume is. So you can see that came in. Actually, this came in at 72.02. And we had a resistance 72 even. It looks like they did go up there and nick it for 72.02 before they've gone and pulled back. Nothing huge. Another one here is the Aussie yen. One of the things I've mentioned, I cautioned yesterday in the chat room when I was talking about the dollar yen, it was at 825, and I said, hey, look, resistance is at 837. And my take was that considering how well the S&Ps were doing, I would have expected more bang for the buck. And certainly, and my point was, hey, you may not see a whole lot with the rest of these other yen pairs. And certainly that's been the case. I mean, if you look at where the S&Ps are, you think that this Aussie yen would probably be able to rally up closer to about 76.20, about another 75 pips higher than we are now. We certainly just haven't done it. And same thing here with the euro yen here. If you think about the S&Ps in and of itself, you think, yeah, this thing can go on and make a run for it. No, one gentleman, a big trader, notable on Twitter, mentioned, I think we can get to 123. Well, heck, we haven't even made it in here to the 122.50. Here's our bias chart resistance. We had the European crossover webinar, which was what, 22.30. It looks like the market stopped at 22.26, so not bad. My take is that if the dollar yen isn't doing that great, considering how much of a rebound we had, then that limits as to what we can do in these other yen pairs. That was my take from yesterday. And you've seen this thing, hopefully those that were on their, had their yen pairs, hopefully they were able to go on and you can see here we had 22.31. The high was 22.27. Okay. So, and that was my take. Like I said, I was looking at I want to look across the pairs and say, hey, look, how's it doing against this one? And that was my concern, is like the one market that's really moving, that's really being impacted, the S&Ps and the dollar yen should really get a good reaction because it's very oversold and we just weren't getting it. So hence my thought was, hey, these yen pairs are rather quite limited. Euro honestly still not doing a whole lot. We're just kind of stuck in neutral right now. Although, as I mentioned, I think the euro can, once we get past Draghi, and I talked about that, we talked about that in the European crossover webinar. Switch back to the screen. In the European crossover webinar, which takes place at 4 a.m. Eastern, my thought was, hey, once we get past the ECB, don't be surprised when we make it up to 13.18, 13.24. Holy smokes, man, we did it this morning on that poor ADP data. So the reason, once again, my whole thing that I was trying to impart this morning, trying to once again give you an idea. I mean, I use Fibonacci and I use levels, but I try and use price structure. And as I said, I try and put myself in the other person's shoes. So once again, this market told you it wanted to go higher. We discussed it this morning. That's why we even had our buys chart at 1287 resistance with a stretch at 1293. And I said, you know, it could take out 13, but I don't think so. But I mean, it could, because once again, this was just really so overpowering. And I'll give you a good example is it reminds me of Blake's analogy about the beach ball, and you try and hold it underwater and you can't hold it. You can hold it for a little bit, but eventually your arms get tired and it pops right back up. Well, that's what we saw up here. And my take was, wow, we went right through that 1237 to 38%, went right to 1258, dipped a little bit more, added some more, came in here, and we don't forget, we'd already gone past the 38. So you're thinking, okay, we'll get a good pullback from the 50%. Man, we couldn't even take out 1220, and here we go. On up again. We talked about that yesterday afternoon, an undertone bid, and we pushed it up, and this morning went up even further. Now, like I said, ahead of the ECB and also the potential for some TLTRO, well, heck yeah, then it can go on and pull back, and we certainly saw that. I didn't think it was going to pull back this far. I thought maybe around 1250-ish maybe. So it's actually pushed a little bit further and going in with the potential for some TLTRO. Talk, well then I think we can even push, you know, I wouldn't be surprised if in Asia we don't come in here like around 1216-ish, something like that. And when if they do announce all that, we could maybe come down here to 112. But overall, I think we'll see the euro moving higher because really the dollar is the one that's going to be getting adjusted now. We've already taken a pretty good dip in the dollar, so it can balance itself out. You can see it right here. But for the most part, I think overall we'll be seeing the dollar continue to move lower under these circumstances. And certainly, like I said, here's the dollar yen. Today's bias chart of the dollar yen, I think it was 844. We're not looking for a whole lot. Yeah, 844. We're at 839 right now. Although we've come down here and we took out the low, so maybe we can push a little bit more. And also, once again, you get a little extra boost if we did get an announcement out of Mexico. We'll see how that comes out. That being said, thanks for joining us here on The Wrap. Have a great rest of the day trading.